You're going to be flipping my flapjacks, folks. We have a lot to get into in today's video. We have so many stocks to talk about, so many things in the market going on, so many perspectives I want to share out there of what's going on in the market right now, what you're seeing. It's going to be an action-packed video, busy video here today, folks. I appreciate you joining me. Thanks for being subscribed. Thanks for being here as always, okay? Before we talk about all those other stocks and all the things going on in the market, you know, there's something I wanted to talk about here at the beginning of this video, and I thought it was interesting because I saw this actually last night. I got recommended one of my old shorts. This was from like October, November, sometime around then, when Meta stock was crashing like under $100 a share, right? And I saw this short I had put out, and I was like, let me just go to the comments. Let me just see what people were saying, okay? And it was really fascinating to see like the comments, like the top comments on that, right? Current PE means nothing, as earnings next year could easily be zero. Their metaverse spending is bananas. Well, here's what happened, okay? They're still spending like crazy on metaverse as they were before, actually more than before, which I don't necessarily agree with how much they're spending on that, but it is what it is. But Meta's back to making money hand over fist again, and wait till these next few quarters. You ain't seen nothing yet in regards to that, okay? Jeremy is going to wake up and cry one day on the camera after he realizes a falling knife didn't come back in time. All these long-term holders have a patience limit. Jeremy is near his end. No, certainly not, okay? I understood the silly valuation I was getting in regards to that stock, and you're going to throw me silly prices on great assets. I'm going to take advantage of that. Somebody like myself that's been in this game 15 years and has the sort of level of understanding of the markets, like throw me these stocks. You know, if they put Apple to $80 tomorrow, I'm going to be buying Apple stock hand over fist. Like, you know, you could throw stupid prices on great assets. I'm going to take advantage. Like, you know, if my neighbor's house tomorrow was selling for 40% less than it's selling today, guess what? I'm going to buy his house, okay? Remember MySpace? They were pretty big at one point. Oh gosh, this has been going on for Meta since they went public back in, what was that, 2012. Oh, MySpace. Casino, you all lose. This person was saying Meta was going to go to $20, right? Interesting. We'll have fun getting destroyed over the next few months and year. Hate to break it to you, but you haven't seen nothing yet. Whatever, okay? Those sorts of comments, a dime a dozen, right there. Meta is junk, Jeremy. Sorry, you should have bought more Oatly instead. No, okay. You know, I hope Oatly does great over time, but I mean, at the end of the day, no, okay. Meta stinks. Oh my gosh, okay. Well, you're going to lose your money. Laugh out there. They're going bankrupt. Ew, good high-quality comment, right? But it wasn't everybody was like that, right? I'm buying Meta. It's a gift. Thank you, okay? Yep, all this hate is coming from boneheads who never read a conference call transcript but continue to complain about the company on Meta's platforms. Yeah, 100%, okay? You know, what you can just take from something like that, right, is you're going to understand when you are getting great assets, which Meta is a great asset, thrown at you at silly prices, you have to take advantage out there, okay? And whenever assets are going down, there's always going to be the person that says, you know, it's never going to stop going down, right? I'm sure there were people in 2009, 2010, 2011, when real estate was bottoming out at just silly prices that said, you know, it's going to continue to go lower over the next 5-10 years. At the end of the day, you got to stay with your convictions, especially on great assets, right? Like Meta shouldn't even be a controversial stock pick, in my opinion, at all. And now the stock's going to climb to $400 to $500 over this next few years. And, you know, people were not buying the stock at under $100 a share, right? And taking advantage of that. And it's one thing to not take advantage of a great asset. It's a whole other to have this just very negative perspective on those stocks, right? And if you look at like everything I've been buying for really like the past year, these are all slam dunk stocks that I'm going to make stupid money in, and I'm not even taking big risk in these stocks. That's the amazing thing. You know, 2021 phase, that was gambling Jeremy. Like, you know, that was my evil twin showed up, okay? He shows up every 5 to 10 years, and he showed up in 2021, right? And I paid the price for that. But you really look at what I've been buying over this past year, none of this stuff is like it should even be controversial, to be quite frank. It shouldn't. Like, you look at these stocks I've been buying for this past year and putting big money in, and these shouldn't even be controversial stocks. They're steal deals. The valuations are steals on them. They're easy money, very low probabilities of losing money on them, and extremely high probabilities of doubling up, tripling up, quadrupling up my money over the next few years. You know, look at Meta. I was loading up on shares at $88, $90, you know, in the $100 range. And, you know, those shares have already well over doubled just in a very short amount of time. I mean, and that's child's play from where those stocks will be over the next few years, right? And so stay focused out there, folks. Stay focused. These people, a lot of these folks, man, they're not built for this game. 2021 and 2022 were the most annoying years I've ever spent on the internet, to be quite frank, in the stock market community. 2021, you had the know-it-alls that thought they were all going to be millionaires and billionaires in the stock market, right? And then 2022, suddenly everybody became a massive bear, especially in the back half of this year, and all stocks to zero. And both of them were 100% wrong. 100% wrong, okay? Nvidia now at this point in time is $300+ a share. It just cracked 300, right? This is a stock that was selling for $110 in the fourth quarter of 2022. And here we are a few quarters later, and it's now $300+, right? And, this has cracked me up. It's been really interesting because I've watched so many bears, short sellers try to short the stock and buy put options on the stock for month after month after month after month as the stock's climbed, right? Not realizing, what they're betting against. Like think about this. You're betting against Jensen, who's led this company forever. And since this company went public, the stock price is up 76,000% under Jensen's leadership, right? Do you really want to bet against a guy like that? Do you really want to bet against him and the team he's built at Nvidia, right? This isn't even a stock I'm personally in, but I'm just I understand the team that man has, and I understand the abilities he has to lead that company, and just would you really want to bet against that? And now they're selling these AI chips for $10,000, $20,000, $30,000. You gotta be flipping my flapjacks, man. And people want to actively bet against a stock like that. What for, man? What for? There's just so many opportunities in the market all the time to bet against Jensen and that team. I'm of the opportunities you got in the market, what is worth it, man? Come on now, okay? AMD is back over $100. Now, here's what's really fascinating with AMD, right? And this is a stock that's almost doubled up. So it hasn't performed nearly as much as Nvidia has performed, because Nvidia is seen as kind of the forefront of AI technology in terms of AI chips, and it seems like AMD's playing a little bit of catch up there. We'll see what plays out over the next few years, but that's the way it seems. And so I believe that's why AMD hasn't performed as well as Nvidia. AMD's still performed amazing, it just hasn't performed as well. But this is another one. Do you really want to bet against Lisa and what she's built there? You can do that. Remember, shortly after she came over as CEO of this company, it was a $2 stock. It was under $2. I remember looking at AMD stock under $2 a share. That was 2015, 2016 kind of time frame there, right? And look what she's done with the companies. Look what the revenues are nowadays. Look what the net income is, the EPS is. Look what the stock price is. Look what the products they have there. And it's just these are sorts of silly pricing we got in 2022 thrown at us. And you had to take advantage, man. And there was a lot of these tech-related names that were just thrown out there as steal deals. This year in 2023, it's not nearly as many of the tech stocks or steal deals, although there are still deals. They're just not, I call it steal deals, easy money deals. There's a lot of other stocks in other industries now at this point in time that are basically doing what tech stocks did last year, okay? Now, Amazon, this is another one that's just so obvious. So obvious, and it's right in people's face, and so many folks are going to regret not buying this one so heavily, man. So heavily. I mean, this is a stock that hasn't done anything over the years, years and years and years in terms of stock price. That the company's made tremendous progress. Look at their revenues, look at their net income over the years, and wait to see what happens to their net income and EPS over this next few quarters. It's going to skyrocket to the moon. And this is just such an obvious stock. Just like Meta was so obvious, Nvidia, AMD, these aren't hidden companies trading at silly prices. And Amazon is one of those companies trading at a silly price right now. And it's been trading at a silly price. And that's why I'm using this entire year. I'm buying this stock all the way up to $150 a share. Okay? So which means I'm not done buying Amazon anytime soon in regards to this one, man. There's a long way of me buying the stock. I don't care if it's 115 today, 105, 135. It means nothing to me. Absolutely nothing. All it means to me is buy more dang shares. Okay? It's all it means. The valuation is silly compelling right now. Okay? Palantir stock. So, Palantir up another 8% here today, now crossed well over $10 a share. The thing you got to understand about a company like Palantir is this stock has what I like to call an unlimited move in front of it over the next 12 months, meaning there is no cap on the move for Palantir over this next 12 months. And the reason being is they just got to the infant stage of profitability. They need 2 more quarters of profitability to get likely S&P 500 inclusion at the very end of this year, or likely early 2024, which means you're going to have massive amounts of money continue to funnel into Palantir stock as it leads closer and closer to S&P 500 inclusion, right? And then you tack on top of that, when it gets in the S&P 500, massive, I mean absolutely epically massive amounts of money is forced to pour into Palantir stock. Not like it's by accident. It is going to be forced to pour into that stock. And you just got a great opportunity here. And, you got other folks out there selling the stock at $9 because it went up a little breadcrumbs. And I'm just like, what are you guys doing? Like you're chasing the breadcrumbs out there on a stock like this that has such a great setup for the short term and the long term, meaning that it has a short-term setup, meaning the next 12 months, long-term setup, meaning the next 5 years. I'm like you don't sell out stocks that are set up perfect for a short-term and a long-term perspective. It just doesn't make sense. And to chase breadcrumbs and something like that, it's like, people do whatever they want. I'm just like, I sit back and laugh. That's all I'll do. I'll sit back and laugh. It's just comical, okay? There's something interesting that happened on Fubo's earnings call that I want to drive your guys' attention to. Very, very interesting, okay? And I was listening to this last night while I was laying in bed, and I thought I would show you guys this, okay? This is actually from their call transcript, which Seeking Alpha actually puts pretty much every single public company's earnings call into a transcript, and they put it on their site. By the way, if you want access to Seeking Alpha, check out the link that I have in the description area, because that's back when I did a deal with Seeking Alpha like a couple months ago, and I don't think they ever changed the pricing structure of that. So I think it's still like the discount deal. So anyways, if you're interested in that, it's in the description area, okay? But in regards to Fubo here, okay, there's a very interesting question got asked. They were basically asking about advertising trends, okay? And this is where things get really interesting. I'll start with that. And so when we looked at our Q1 results, to your point, we came in about flat in ad revenue, okay? Now, ad revenue basically meaning, if you have, for Fubo, the company, right, they have all these different channels, and you have a certain amount of ad spots that Fubo can have on each channel, and a certain amount of time slotted there, right? And so it's a great opportunity for companies like Fubo to make, extra money on top of, obviously, just people paying for the service, right? From a monthly perspective, let me just talk you through that, and then we'll go through 2Q in some of the categories. March was better than February, which was better than January. Okay, so we have a clear trend that is getting better and better for advertising for them. And I'd say, if I sort of give you some numbers around that, January was down slightly, February call it flattish, and then March was up a bit. Maybe call it mid-singles, okay, so 5-ish type percentage, okay? And then we're seeing further acceleration now into April and the second quarter. And so far in April, I think we finished up double digits. So we're encouraged what we're seeing in terms of the trends. January, February is better than January. March was better than February. April's better than March. You have a clear trend that basically shows advertising is getting stronger and stronger and stronger, okay? Now, this matters for way more than Fubo. Obviously, this is great news for Fubo, and I hope this trend continues on for years and years, okay? But this is big for two other very important stocks in the stock market, okay? And those stocks are Google and Meta, okay? Don't be surprised if these companies, as far as Meta specifically, they're going to destroy EPS estimates and net income this entire year, in my opinion. It's going to be incredible, okay, absolutely incredible, and so that's why I don't think the momentum in Meta is going to stop anytime soon, outside of the whole market crashing or something crazy like that, okay? The momentum there is going to be ridiculous. And I think Google and Meta could actually surprise on the revenue side as well as the year ticks on, because I think the advertising market's coming back a little better than folks maybe thought. From what I see, I think, from what I see on YouTube, it looks like we've kind of bottomed out, at least in my opinion, in terms of ad rates and those sorts of things. And it looks like things are starting to get a little better in regards to that. I don't want to get too excited yet, but these are things to just kind of keep in mind out there, right? And you just sometimes do have to wonder, if folks on Wall Street have access to some of these numbers before other people have access to them, right? Through different means and different ways of getting access to them. And, why do these stocks keep moving up? Maybe there's a little something that's known out there. I'll just put it that way, okay? RH, massive epic move up here today, okay? Stock was up over 7%. I mean, just an epic move up. Now, people say, oh man, you must be super happy about this. You just made a video about it yesterday. You put, over $10,000 in the stock, and, boom, right off the bat, it's up, 7+%. That's, $700+ I just made in less than a day on one stock, right? In a very small position. My answer to that is, no, I'm not happy about that, actually. I'd rather have RH have gone down another 7% here today. This is a position I want to really build out over this next 12 months, so I'd rather have it not do well in the short term, okay? That's my perspective on that. I mean, I guess it looks cool because I just released a video and then it goes up 7% right away, but no, okay, I'd much rather have that stock have gone down 7%. I'd much rather read comments that say, oh, you're such an idiot, it went down another 7% today, oh, and all that stuff, rather than the stock went up 7% and now I have to pay a much steeper price for RH next time I buy RH shares, right? So now there was actually a pretty good article somebody wrote on Seeking Alpha in regards to kind of Buffett selling RH and kind of like, a positive perspective. And so if you're interested in RH, read that article, okay? And once again, I have that linked in the description area if you're interested in that at all. No, it was interesting. I was reading this some comments on that article, okay? And I read this comment specifically. It cracked me up. It says, winter's coming. It will eventually get better, but it's going to get a lot worse first, okay? And no disrespect, Mike, but winter's been here for a long time in regards to the luxury real estate market, okay? Winter's been here. Doesn't get much worse than what it's been over this past, I would say, 12 to 14 months in regards to luxury real estate, okay? We got to wake up, and we got to call it what it is. Luxury home sales have been in a disaster. They sank a record 45%. That's worse than the great financial crisis. Worse than the great financial crisis. The biggest housing bust of all time in the United States of America. Worse than that. Okay, so I mean, I think people it's healthy for them to wake up and realize we've been in winter and it's been awful, as in worse than the great financial crisis. Okay, and so in regards to luxury home sales, it only gets actually better from here in future years. Okay, and even if prices aren't to go up in any major way, you're going to see a lot more people moving. We've had just a complete move out in terms of amount of people moving in the luxury. And these homes have been sitting on the market a while. And they're going to bring down prices. And eventually they'll get these properties moving, right? This is a good example of a house I've looked at a few times, right? And interesting, it's around just under $10 million here. And check this out. This house was listed back in February of 2022. And they listed it for $11 million, right? And they brought down the price. And then I guess they took it off the market and tried one of those tricks. Oh, we're going to remove it, and then we'll put it back up, and it's going to look like it's a fresh listing. Okay. Do you not think, like, buyers are educated? Do you think if somebody buys a $10 million house, they're not going to look at the price history and be like, oh, that's a funny trick they pulled. They removed it and tried to make it look like it was a fresh listing. Like, who do they think they're selling to? Come on, man. Like, come on. Like it's funny, these folks in real estate try these tricks. And like, you might be able to pull that on a $200K house, okay, and be able to trick somebody like that. You're not pulling that on a $10 million house, okay? Give me a flip and flapjack and break. What a joke, okay? And by the way, a little advice for whoever is listing that house. Hey. How about a little $30K to $50K on some staging, okay? Because a $10 million house completely empty doesn't look like a $10 million house, okay? You got to stage that, baby. Spend a little money, okay? This is a house. It's listed right now for just under $7 million here. And if we go ahead and take a look at this. So first off, Zillow's doing some questionable stuff. One is I get like 85 million Zillow emails a day. I'm like, why you guys send me 5,000 emails a day now? It's ridiculous, okay? Second thing is, it's like almost they want like people to hit on those emails and go to Zillow and, to try to pump up their metrics or whatever. Very questionable, okay? But here's the thing. Zillow's doing other weird stuff, borderline shady, okay? This is 33 days on Zillow, and I'm noticing this consistently on Zillow where it says these homes have only been on Zillow, and so it gives the illusion of like, oh, it's kind of a fresher type listing, right? Whenever you go to look at many of these homes, you find that they've been listed for a long time. This baby was listed back in June of 2022, okay? And back then it was listed, by the way, for about $8 million. And obviously they brought down price then in October. They brought down price last month to just under $7 million, right? So questionable Zillow. You're doing questionable stuff. That's why it's put like that, right? Once again, luxury homes in a tough place. Look at this house here. Brand new build, roughly, they want about 3.6 for it. In regards to this one, check this out, okay? They listed this way back in March of 2022. Another house that's been on the market for over a year. This is winter. When these sorts of modern homes aren't moving, it's winter, okay? When the houses like this have to sit and collect dust for a year, 2 years, 3 years, yeah, you're in winter, just so we're aware of that, okay? $4.3 million listed for. Then they brought it down. 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 Then they took it off the market and then somehow brought it back at a higher price. Come on, man. Laugh out loud. Like, come on, man. Seriously? You think you're going to trick somebody with that? You're going to be lucky to get 3.3, 3.2 for that thing. And once again, a little advice, okay? A little advice. You want to sell a house for $3-something million. How about making this backyard look a little nice, or this front yard make it look a little nicer? I mean, look at the curb appeal. This is awful. Like put some nice cactuses. Spend a few $1,000s. You want to sell a house for $3-something million? Spend a few $1,000s in this front yard and make it look decent. Like, what is this, man? You don't have to blow the whole budget. Don't spend $50,000 on this. Spend a few $1,000s. Put a few little, pretty bushes here and a few cactuses and things like that. Like, come on, man. You can't have somebody pulling up to this house and expect to sell it for 3.6. Sometimes I just wonder, like, what are people doing, okay? Another little advice. Look at this fridge. This is the same fridge I have in one of my homes. It's like a $900,000 house. You can't have a fridge like that in a $3-something million house. Like, what are people doing? Like I really think like people just got their hands on some easy money and were like, I think I'm going to build homes. And just like anybody that knows anything about luxury is going to walk in there and they're going to notice that fridge is not the type of fridge that you expect in a $3-something million house. Sub-zero, okay? You got to bring a $20,000 fridge. You can't bring a $5,000 fridge in a $3-something million house in Vegas, okay? You bring the $20,000 special. That's what you do in regards to that. The moral of this story is 2023 is about as bad as it gets in terms of what's been happening in luxury real estate, okay? And so for RH, it's pretty much only up in future years, 2024, 2025, and beyond, in regards to their business, okay? Now, I think there's an interesting opportunity out there for even a stock like Rocket. Not a stock I personally own, but, this is a stock that, in my opinion, is already bottomed, okay? It's been kind of bottoming out $6 to $8 range. And for a company like Rocket, it's only going to get better for them because I can tell you, in terms of mortgage demand, it's been so awful. It will get back to healthier places as this next few years tick on. And in terms of refinance, that business has been at pretty much zero, almost zero, for, I would say 18 to 24 months now at this point in time. Once rates start dropping again, you're going to have a massive influx of people refinancing who obviously have gotten mortgages in the past 18 months at, let's call it, higher mortgage rates. And so a company like that, this is their bottom stage in 2023, and they actually see a pickup, in my opinion, in 2024 and beyond. No, people will probably start to position in this stock. I think they're already starting to position, but they'll probably continue to position in the stock over this next 6 months to get ready for 2024. That's my opinion in regards to that. They don't even need the housing market to go up. For a company like Rocket, they could have the housing market actually go down and actually thrive in a much better place. And a recession would actually help them out immensely because then the Fed's got to drop rates. It would obviously pick up refinancing activity in a major, major way and moving activity in general, right? The one stock's in relation to home build or housing right now that I don't trust, it's the home builders. These stocks, many of them are trading at, near 52-week highs, some of them near all-time highs. I don't trust any of these home builders, okay? Not that I expect them to crash. That's why I'm not playing put options on any of these home builders. Maybe there's a day when I do that. But I have no interest in playing put options. I just think the upside's very limited in these home builders. And I think there is downside risk in regards to these home builders, especially as more homes hit the market over this next year. I think there's going to be less and less need for new builds out there. And so my personal opinion is I don't trust any of them. Their backlogs have been plummeting in a major way. I don't trust any of those home builders, okay? I just think there's very limited upside and there's potential big downside there. And so, yeah, that's my opinion on that. No, this is huge. This is one of the reasons the market was up today. So Biden and McCarthy are both saying the U.S. will not default on debt, on obviously the debt. And so in regards to this, I mean, I'm not surprised. They should be able to get this passed, right? Biden can't have this go away, right? And McCarthy's going to be able to get some things his way. And he's going to be able to get some things not his way. They'll find an agreement. The market always worries about these sorts of things. They always find a way to get it done. It's politics. They're going to make it go to the last minute. It's going to be a drama show. Both sides are going to make the other side look bad. It's the way it's been, and it's probably the way it will always be. In another few years, we'll be dealing with that again, okay? Target, this is one of my dividend stocks. They reported earnings here. I've done very well in this stock so far, very, very well. It's treated me tremendously well, not just in terms of dividend gains, but also stock gains from the price I was buying this past year, right? So in regards to Target, it's not an exciting time in their business whatsoever, right? Sales was up 0.5%, other revenues up 10%, total revenues up 0.6%, right? Not an exciting time for Target's revenue in 2023. And so if you're thinking of excitement in regards to this, the stock price keeps moving up because ultimately it's Target, it's seen as reliable, it's seen as steady, and ultimately it's seen as it'll build out business in 2024 and beyond, right? Operating income was down more than revenue, obviously, about a 2 percentage point difference there, so that's not good. Net earnings was down 5.8%, not good, and diluted earnings per share down 4.8%, not good. But I mean, honestly, at the end of the day, that's what we expect from Target this year. Most years not, okay, but this year it is, okay? You got to remember, you're planting trees in this, right? And when you plant trees, and you're going to get your hands a little dirty, okay? And so that's the stock market as you build out your portfolio. And you're going to have all these people always saying, oh, it's going to crash, and this and that. There's going to always be a million people saying a million things, okay? At the end of the day, what do we know throughout time? We know that the ones that buy assets get all the wealth. It's always been that way, and as far as I see, it's always going to be that way, okay? The ones who buy all the assets end up with all the wealth. And so you got to understand all these dips you ever get, whether you're getting some of the best companies in the world at 40, 50, 60, 70, 80% discounts like we were getting last year, right? Whether you're getting real estate for 10, 20, 30% off, right? You've got to take advantage of those. Great homes and great neighborhoods across the United States of America are going to do very well over time. Are going to cash flow a whole lot of money to you and going to appreciate a whole lot over the next 10, 20, 30 years, okay? Great companies that have great business models and great management teams are going to produce you a whole lot of money over this next 10, 20 years. But so many times people get caught up in all the short-term stuff and trying to pick bottoms, and ultimately they're just reacting out of fear. If I had to be a psychologist to these folks, they're reacting out of fear because they're scared. They don't know. They got all these worries, okay? And then what they do is when everything looks great again, right, and everything looks coast is clear, as it did in 2021, everybody piles into the market, and you have that type of situation. And so what we're going through right now, you got to understand, this is going to be one of the most hated bull markets we've seen in modern times. And the reason being is we're rallying into a wall of worry. And you have so many people that are so offsides, that are so underinvested into this market, that are short, that are puts, that are, just not in this market right now. And they're watching a stock like Nvidia, an easy money stock, go from $110 to $300+. They're watching Meta go from, under $90 to $240 on its way to $400 to $500 over this next few years. And they're watching all these moves, and they're just sitting around and just saying, oh my gosh, can't. And then just their plan is not playing out, to be quite frank. And they think certain things should happen the way they want them to happen. But the market doesn't play it like that. The market doesn't care about how you want it to play out. And you, as an investor, should not care about what the market wants you to do. At the end of the day, if you see opportunities out there, you got to pounce on those opportunities. You've got to take advantage. Regardless, if you have a feeling this might happen, or this stock might go down to this price. Oh, I can't buy Meta at 88 because I think it might go down to 78. It doesn't matter, man. If you understand how to value companies, if you understand how to project numbers out, and you understand how these business models work, especially for these experienced companies with great management teams, you've got to take advantage of those opportunities, folks, okay? And so I hope you enjoyed today's video. And if you want to join a group of individuals that have this sort of mindset about building, about growth, about building out great portfolios you're going to be proud of 5 years from now, 10 years from now, then apply to join my private stock group. That's going to be linked in the description area down there. That's a group you deserve to be part of, because I'm telling you, a lot of people are a part of groups that just are not healthy, man. All they do is give you doomsday 24/7, 365, and that's all they're going to continue to do in future years as well. And it's never going to be any different. And I can tell you, just as in life, you surround yourself with nothing but negative people, you'll have nothing but negative outcomes. That's the way it's always been. You are who you hang around with. Believe me on that, okay? Who do I hang around with? Think about that. Who are the type of people I hang around with? Appreciate y'all. Much love as always. And also, just so you guys know, I did a full-blown reaction to the Elon Musk interview yesterday. That was, I think, the longest video I ever put out in the history of my reaction channel. That is an hour and 17-minute beast. So appreciate y'all. Much love as always. Keep building and have a great day.